And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
What's going on, everybody? Welcome to the Market Recap. I am Dan Hodgman. It is Tuesday, January 11th. Hope you guys found some opportunity here today. We had directional markets. I've seen a lot of traders doing pretty well today, and I hope that includes each and every one of you. We got opportunity, right? We got crude oil kind of showing holding above 79 here on the open, which I like to see. So that's something to keep in mind. We pulled back to 79. I like that. And I'm going to put my target on a trade like that right up at 80. I'm going to look for that full dollar move. What I'm going to do is I'm going to sit in it. And as soon as I watch that market start to approach 80, that's where I'm going to be patient. I'm going to start to keep an eye on that trade. I'm going to watch that order flow. How's the market reacting? As soon as we got to 80, it accelerated right through. It finally broke that barrier, which we were struggling to get through tail end of last week. And we got a nice breakout here. That market really continued up over 4% today. Pretty much ending here today on those highs up at 81.43. We got a little over 81.50. So huge move, $2.50 move off that 79 mark. And we're going to take a look at this one a little bit closer, but I want to talk about that one. So good opportunity there. Yet S&Ps and Nasdaq kind of opened up. A little bit of weakness right off the open, right? We saw a little bit of relief. We saw the sell right on the open, but that sell did not last. It did not hold. Right, and that's what we want to look for. We want, when the market starts to get directional, we want confirmation and continuation in that direction. When we're not seeing that confirmation and continuation, hey, that's where we got to be patient and wait for that market to start to rotate around. Both of those did. Struggled to make lower lows and got back on the trend. So both those markets up today. Nasdaq up 1.5%. S&P's up around 1%. Gold, I like gold. Pull back off the open. Failed to make it, though, down to settlement price. That's kind of what I was looking for on that equity open. I wanted to see if I could get gold to come check settlement prices. It did not. Couldn't really get inside yesterday's regular trading hours, and value was below, so really couldn't even get inside that regular trading hour range yesterday. And so those are things we want to keep an eye on. Prior day high, prior day low, value high, prior day value high, prior day value low. A lot of levels we're paying attention to. We want to keep those in mind as the markets start to approach them. So that market couldn't do it. But the euro, did. Euro pulled back to settlement price, kind of sprung through there a little bit, but quick bounce again. Failed to hold those lows. That market rotated really nicely high. And then the same thing for the 10-year note. That market pulled the settlement price, kind of worked around there a little bit, and then took right back off. We're seeing yields a little bit quieter today. You've got treasuries getting a little bit uptick. You got Jerome Powell also talking. The Fed's got to get a little bit more stern in what they're doing, right? The rate hikes are coming. They got to be a little stronger on policy to help kind of curb this inflation. And that's something, again, CPI, I believe tomorrow is the day on CPI. I'm saying it. Yeah, tomorrow, CPI, 7:30 a.m. Central Time. That inflation number, I told you guys yesterday, I'm going to continue to reiterate this. Inflation's going to be a huge, huge factor for us this year, the year of 2022. It's going to be an important factor for us to really pay attention to this year. So we got opportunity out there. Hopefully you guys were able to find it. We saw some good levels get played off here today in these markets. We'll take a look at those. And I just want to make sure, if you haven't already, make sure you are signed up for John's Foundations classes. Yes, it goes every day at 12:30 p.m. Central Time. If you cannot make it, that's totally okay. We got the recordings coming out for those that are signed up, so you do get that recording if you missed it. We're just getting them ramped up. We're 2 days in, so you still got 14 more days or 14 more hours of one-on or personal coaching with John. He's really breaking this down. You got a great syllabus, so you can kind of pick the days that you want to make sure you're there. I'd highly recommend just being there for all of them. So if you haven't signed up for it, make sure you do. Frederico, good to see you. Bill, David, PD, Nick, finance coach from Germany, good to see you as well. Big Toasty, PK, do you use Jigsaw? No, I don't use Jigsaw myself. Going places, good afternoon. Figured, well, I'm here to ask you a quick question if you have a second. Do you know why it takes 1 to 2 weeks for a US ACH withdrawal? It's just, I couldn't give you specifics. I just know that's standard how long it takes. As soon as we have all your bank information, we submit. It's about all I know. You can always, if you have questions, our support team can answer those a little better than I can most of the time. Support@topstep.com. Make sure you shoot them an email. All right, let's go take a look at these charts here and see what kind of opportunity we had in these markets. All right, as always, we want to start with our crude oil. And here's what we're looking at. Crude oil this morning kind of opens up, right? We see a little uptick, and this market moves all the way through that $80 mark. That's what did we look for last week? We said, hey, we got to keep an eye on this 80. 80 is going to be a key level for us to pay attention to. 80 quick rejection. Now, you can take that trade off the open. I'm probably not. I'm going to probably hold on to my hands a little bit. I'm going to wait. I want to see what 80 is going to do. 80 rejected pretty quickly. Now, here's what I love to see. Market started to rotate lower. Where's this moving to? Where are we getting? Well, we got an overnight little swing high here, right at 78.93. But what I liked was this market coming right down to yesterday's regular trading hour high, that prior day swing high. Main point, big ideas. I don't have market profile. This is strictly volume profile on TS Trader. I do believe there is some sort of option out there to add market profile, but I'm not 100% sure how to do that or where to get that. All right, so this market pulls right down to regular trading hour. That's what I'm liking seeing here. We've got a big round number up here at 79. I'm liking this. I've got a couple confirmations, and hey, this has been a strong market. We've got 2 low days, and we're going to look for an uptick here. Well, probability is going to show after you start to see a couple down days. Those are weaknesses in an uptrend, and we started to see that uptrend coming in the overnight session. So I got a lot of confirmation. I like the long versus the short up at 80, so I'm going to take the long down here. And now, as I was saying before we jumped into the charts, as this market's approaching 80, I'm going to have my target at 80, but as it starts to approach, that's where I'm going to hold tight. I'm going to sit on my hands just a little bit here. I want to see how this market reacts at 80. I'm willing, if it comes back on me by 15 or 20 cents, I can give that $150, $200 up because I'm looking for that breakout. I'm looking for the big breakout trade. Not always is it going to be the case, but I'm looking for that. I'm paying attention. This is an 80 mark. This is a big level. This is a key area for us to look for opportunity. And the market blew right through almost a full dollar within a half hour. Or more than a full dollar, I should say. I think almost a full dollar and a half hour. So you got a big move through 80. As soon as I move through 80 and I start to see this market creating thin volume here, I'm okay put my stop here at 80. Locking in $1,000 on this trade and holding tight. Tanya, good to see you as well. Nick, I see your comment there. I'll touch on that here at the end. All right, so this market breaks through 80. That, to me, really was a great trade. 79, pull back to yesterday's regular trading hour swing high here. Momentum, directional move. We're trending higher. We're looking for weakness in those uptrends on the grand scheme of things. 2 down days indicates to me, hey, we got to start looking for high levels. Bashi, why are your value area high and value area low so big? They're just the red lines here. Just how I make it so it's visual for me. All right, next, let's go ahead and look at the S&P 500. All right, S&P 500 here. This is another great setup. Market opens up, and like I said, we saw a little weakness on the open, but we don't see continuation through. We don't see trade and acceptance inside value from yesterday. As soon as we see this happening, huge opportunity for an inside or range-bound trade. So as we open up here, when we're doing our market prep this morning, we're saying, okay, I've got a level down below I'm looking at right here, which happens to be that prior point of control from like 2 weeks ago, 3 weeks ago that was unchecked. Market pulls right back. Value high from yesterday. I love all my setup here. I've got an opportunity as this market pulls through. Now, let's talk about this a little bit, right? You get two options. As the market approaches a level, we've got two options. And this is what I tell a lot of new traders. When the markets starting to Bash, I can touch on that in just a second. As the market starts to kind of pull in here or approach a key level, we've got two options: buy or sell, or I guess you could call a third, sit on our hands. You know me, when markets approach value areas, I'm love to look for opportunity. So market approaches that value high. Now we can short this, right? We can short this and say, hey, I'm looking for rotation back inside value from yesterday. No problems there, right? But where's my stop going to be? Am I going to look at just kind of this high volume node? Yeah, there's an opportunity here, right? So I take my short. I can kind of put my stop. We got, two consolidation areas here, right around 35. So I got a 5-handle risk. But if I put my stop, if I'm taking the long here, all I'm doing is as soon as the market starts to trade inside value, I'm closing this off. So we're allowed to keep our stops relatively tight. That's why I like the long side here as we approach. If I'm looking for the short, I want to see this market start to accept inside value. Once I see acceptance inside value, then I can look for rotation and point of control and value low from yesterday. But as we approach off the open, that's what I'm looking for. I'm looking for a chance to take the long here and rotation back higher. All right, next, let's go ahead and look at the Nasdaq. I think tends to be everyone's little bit of favorite. Now, here's the difference. We saw this in the S&P. Market kind of pulled back. We've got a consolidation area, which happens to be the swing low here. I'm hesitant to take that trade, right? I don't like that just yet because it doesn't work for me. So I'm looking maybe to see if we can get this pulled down towards value. It doesn't. As soon as I recognize that we're not making it near value and we've gone a half hour or an hour of trade and we're not making lower lows, I got to look for rotation higher. I got to look to see this market start to actually attract some buyers. And so that's what this market did. Yeah, we made a little bit lower here, but we got lows, we got higher lows, and that's what I'm paying attention to. We're struggling to attract these sellers. If sellers are struggling to be attracted, hey, that means buyers are going to overpower. This market makes a new step higher. We get a nice 1.5% move here today in the Nasdaq. All right, next, let's go ahead and look at the gold. Gold, I think, same setup here as we saw in crude oil. So market opens up, we start to see the sell-off. Right, and that's what I'm looking for. We see a little bit of a sell-off. This market is moving higher. We're going with overnight trend. We got our 200-period moving average and yesterday's regular trading hour swing high, which happens to be an overnight nice little swing high, is here as well. So I've got 1, 2, and now 3 confirmations. I need to see this market come down, check this levels if I'm looking for short. I need to see it check this level, hold down here, and continue to attract volume. If it's not coming down to this level and it's not attracting volume, within a little bit of time, we start to see rotation higher. That's great. That's an opportunity. We're looking for the long down here, down below. If we miss this long, that's where this trade gets really difficult because it is a really strong uptrend. That's where you've got to be a little bit more comfortable paying attention to order flow. Order flow is super important, all right? If you're trying to get in on momentum and directional moves like this, because we're not seeing a ton of pullback. We got one around 10:30, 11 o'clock this morning. A little bit of a hold. I won't even call this weakness. It just held up for a little bit, failed to bring in some new attraction here, but then this market can kind of continue to trend higher. So you got to really be comfortable with order flow to get in on trends like that. All right, next, let's go ahead and look at the euro. Euro pulls down nicely. You got point of control here at 113.38, 113.38, and you got settlement price at exactly that, 113.38. So we got settlement price and point of control from yesterday. Yeah, this market opens up on the equity open. It makes a quick move lower. But the same thing we looked at in all of these markets on that initial move, it was a dry, weak low. We didn't attract a ton of volume. We didn't make continuation into that direction. As soon as we see that, that's a quick recognition. Shorts are weak, longs are strong. So that's what we're looking for. All we're looking for is this market to start to rotate higher. So as soon as we start to pull back one more time to point of control as we move through, that's our chance. We're looking for an opportunity here at point of control. And again, continuing with rotation higher. This market's been in a nice sideways trend for quite some time now and kind of continuing that. And lastly, we're going to look at our 10-year note. What do we got here? We have beautiful channels starting to set up. So this is what I love to pay attention to. I know there's a question in here about how do we get volume profile up onto our chart. So all we're doing is coming to drawing tools, selecting volume profile. You select whatever time period works for you. I use pit hours. John and I both do, but I want to kind of give us an idea here over the last 3 days and what this market's really been doing. And here's what I love. As soon as you start to look at things, we can kind of bring this back a little bit. Here's what we're seeing. We got value low over the last 2.5, 3 days of trading, not including what we saw here. So I wanted to put this on before the market traded and bounced down here. We got value low, or our range low, down here at 128.02 half. 128.02 half is our value, or call it 123.03. 28.03 is value low. This is where I'm looking for opportunity. I'm really not looking to continue to make tests down lower. I'm using higher time frame, bigger volume, more time bringing these opportunities in. I'm rotating this strictly from low to high. That's what I'm looking for. All right, I know there's a question in here about how do we get the lines to look like this. Pretty simple. When you put it on, you can come over here, select it, and you can choose your value colors, right? You can choose your thickness as well as what kind of line you want. Solid line, dash line, farther out dash line, even further out, bigger dash line, or dash dot line. So you got some options in here, so you can kind of choose that, your thickness. And for those that are curious, we all do run that 70% value area, all right? 70% of the volume, the meat of that volume kind of creates that 70% value. So that's what we got there today. See a lot of questions. Tanya, good to see you. All right, Nick, I survived my first day of trading in the live account. I had a question regarding the VIX. I use Think or Swim to view it, and there are 3 different options: VIX, VX, or VXH22, which is most relevant. I personally just look at VIX. I think everyone looks at something different. I look at the CBOE's VIX. That's the one I pay most attention to. Yeah, main point, like I said, I'm not sure how to get... I know there is something out there for market profile. I don't personally use that. It's not a tool that is in my toolbox. I'm not a big fan of market profile for myself. I know it works for a ton of people. It's just not one that I've been used or gotten comfortable with. Let's see. Dead letter opener. Oh, sorry to hear about your back. I've been there. I've had 5 slip discs in my back, so I know the pain. Just relax. Markets aren't going anywhere. Don't feel like you missed out on anything. Take care of yourself first, because if you tried to trade with a bad back, take it from me, it's not enjoyable. Yeah, Bashy, you can just totally take care of it right there in those options. Is there a maximum? I assume you mean is there a maximum amount of contracts you're allowed to trade in the combine? Yeah, you can find it right on our website, topstep.com. I think there's a tab up top how it works, and it lays down our scaling plan. So each combine has a different amount of max contracts, and how those contracts are accessible varies too. So in step 1, you can use the max leverage for whichever combine you're in, from as little as 3 up to 15 contracts there. And then as you move through the program, step 1 and then our funded level, step 2 and our funded level, there is a scaling plan. So we want to see you kind of generate some profits before you scale up in there. So you can find that right on our website, Autolicious. All right, so we've got Bitcoin finally catching a little bit of a bid here today, 42,765. Remember, we're talking, referring to total trades. No, I wouldn't say there is a max, but I'd also say from a trading perspective, keep in mind those commissions, right? The costs of doing business. I like to use the benchmark of what it costs for an average day for a trader to stand on the trading floor. We have heavy expenses, to stand there. And if I see a trader having commissions over, $1,000 in a day, I think you're setting yourself up for failure. That's going to be really difficult to overcome, right? That's a max cost for some bigger traders that were standing on the floor to trade any given day. And we're not doing profits, from a retail perspective, like guys like that. That's the cost to stand down there and do business, close to $1,000. So if you're doing that, I think you got to reassess. Look for higher time frame. Look for waiting for the markets to approach those extremes to kind of capitalize. You can kind of leverage up a little bit there and then sit in that trade and wait for it to approach the other extreme. One thing I would say is go check out today's Coach's Playbook. We talked about this idea of range trading, and I kind of delved into a little bit of avoiding that center, waiting for the extremes to get checked. And I can tell you this much: you can take very few amount of trades in a given week and have extremely profitable weeks by doing things of this nature. Some days you may only see 1 or 2 trades as it approaches those extremes or the channels, right? You guys have seen me talk about it. We've drawn them here in the charts, right? We kind of define a channel, whether it's range bound, trending up, trending down, whatever the case may be. You kind of define those extremes and you just wait for that market to approach them. At the end of the day, our job is not to execute as many trades as possible. Rather, our job is to be patient, waiting for those high probability trades. So that would be my big thing. PD, I hate that I can't get out of scalping mode. I don't want to have so many trades per day. Well, PD, couple things. I'd love that you bring this up. First off, if you're trading a highly volatile product, Nasdaq, that tends to be one that likes to attract that scalping or high number of trades mentality. I get it. It's exciting. It's moving, right? Levels are a little bit more elastic when it comes to the Nasdaq. We've talked about this elasticity, right? Take that rubber band. It's a kind of a bigger rubber band that's willing to kind of move through levels. I would say, number one, higher time frame. Number two, think about looking at a little bit more stable product. I like the S&P. I think there's a lot more money to be made in the S&P than there is in Nasdaq, because Nasdaq is not as controlled, right? Nasdaq is that wiry, crazy, wild one, where S&Ps you got a little bit more control. So you can be, it's gonna prove your success as a trader, I think, better over in the S&P. That's a product that I'm more consistent in. I trade Nasdaq. I am in it. I'm not taking crazy number of trades, a few here and there. S&Ps I think is going to be the best one to kind of help slow down that scalping mentality if you're an equities trader, right? So start looking for a little bit slower market. Profits are still there, right? You can see, you're almost 3 times the tick value in S&Ps that you are in the Dow or the Nasdaq. So you got bigger tick value, 1225, right? So you got bigger numbers there. And then you've got more opportunity, right? And levels are much more defined in that. So you can have a little bit more confidence trading off those levels, because it's not going to blow through and it's going to go $300, $400, $500 a contract against you, but that level still hold. It may move $100 through or $200 through, but that's kind of a big move and it'll recover nicely. So you'll see levels hold there. So those are a couple things I would say. And then make sure you open up your time frame. Get a little higher time frame of what you're looking at, right? When you start looking smaller, those 1 minute, 5 minute charts, things get a little bit more dicey. If you open up your time frame, it slows that market down. It's kind of like slowing your breathing down a little bit. Quantum trading, having a hard time holding on to winning trades. Once I see them in the money, my instinct is to always realizing it, making good entries, but lacking conviction to hold for the big move. All right, great point here. You got a lot of things you can do. Number one, set your profit target and walk away, right? I mean, obviously you want to check on it. You don't want to leave the house, disappear for 5 hours and hope to come back and everything worked. But get out of the room. Create a design distraction. I've always said one of my biggest design distraction is Candy Crush or phone on your game, something that kind of can hold your attention a little bit while that trade plays out. You can do that, kind of minimize things. Also, look back at all your prior trades and recognize how much you've missed out on by realizing those profits too soon. If you have that predetermined profit target that you get in when you get into your trade, that's going to allow create some confidence. You know the plan. And if you've looked back and saw how much that plan has worked out over time, it's going to create a secondary confidence. So you've got 2 confidence or 2 signals that say, hey, staying in this trade is going to work for me. That might help. How to set my anchor points on volume profile. Just click where you want it and drag it over. I do the opposite. I hold them too long and they still owe me money. Spencer, same thing. Set that profit target. Know where you're going to get out. That's really going to help you out. Awesome. All right, guys. Thanks for all the questions. This is awesome. Anytime you have questions, let's bring them in. Let's talk about them. Let's flesh them out a little bit. I do have to get running. We're kind of pushing our time here. But just a reminder, tomorrow, CPI, 7:30 a.m. Central Time. That's the big one. Followed at 9:30. We've got that crude number. So if you're a crude trader, check on that one. So you got 2 major numbers tomorrow. Keep an eye on those. But with that being said, I got to go ahead and sign on out. John will be back tomorrow morning, 7:45 a.m. Central Time with the market forecast. So tune in. Until then, stay safe. Wash your hands. Trade smart. Trade well. Look forward to seeing you guys in the markets. Take care, everybody.